2022 could be a year of real turmoil and real change in the labor markets. And according to a survey that we did for a client in Q1, we found that when asking respondents, are you worried about losing your job in 2022, overwhelmingly, 89% of the individuals that responded indicated that they weren't. Now, with the backdrop of rising interest rates, geopolitical tensions in Europe, the stock market in the US falling a little bit or correcting, what we're seeing is that there might be a disconnect between how workers feel at the individual job level and what the macro economy is going to be able to deliver this year. The fact that workers are so optimistic about their job security in 2022 speaks to just what the last 2 years have done. And I think we can talk, pros and cons or cost benefits of policy and what all the stimulus has done. At the very least, what it's done and the regulations and what we've done with the economy over the last 2 years is that we've built up a level of security for workers, which I think is a good thing. What isn't such a good thing is that if that confidence bleeds over into overconfidence in a market that becomes choppy and people aren't ready for what could be on the horizon. Anecdotally, one of our clients that works in the outplacement space is seeing more companies reach out, and there's more demand for outplacements, which means there's more demand for employee support in the face of reductions in forces. And so if we start to weigh these counterfactuals or these counter forces even, what you have is an economy that is a little bit more shaky than people are giving it credit for, and we've got an overconfidence at the worker level to where if anything happens to where companies do mass layoffs at a frequent pace, workers may not be ready and psychologically ready, but also in terms of what we're seeing with expenditures. I mean, the U.S. was the surprising over-indexer in terms of luxury spend at the consumer level last year. And it's not surprising if you think about what we did with stimulus and kind of spending, consumer spending over the last year. But it is surprising when you think about what that means going forward and whether people have built up enough cushion to where they can absorb a job loss, so to speak, or if something like that happens over the next 12 to 18 months. The geopolitical tension, I think, is something that we look at a lot and try to determine whether that has an effect. I mean, another kind of anecdotal piece of evidence is that companies that deal in B2B, especially when it relates to manufacturing and supply chain, have seen kind of decision-making freeze up a little bit, especially as it relates to hiring. And so what does that mean for workers going forward? If people aren't actively hiring at the pace that they were over the last 12 months in certain sectors, it's not as if, there's so much demand in the more fluid sectors, the technologies and et cetera, that are always hiring. There's not so much demand that it can absorb all this worker, all this worker demand or this worker volume if certain industries fall down a little bit this year. So this is just a quick note indicating that there's a lot of worker optimism about their job security in 2022. We did this survey just at the start of the year, and you can see that it's overwhelmingly confident, overwhelmingly optimistic about what the job market looks like. And if people are not worried about losing their job at the worker level, but at the kind of the decision-making level or the macroeconomic level, we're seeing such uncertainty and such turmoil. I think that disconnect could jump up and hurt some people if they aren't ready, based on kind of their own personal ways of going about life. So there's a quick note and something to look out for over the next few months.